Last week, traders revised the prospects for the global economic recovery. First and foremost, they were disappointed with the weak report on the US labor market, as well as the lack of US inflation growth. The US dollar ended the last trading week with a loss of 0.45%. The week before last, the US dollar index, which measures the strength of the greenback against a basket of 6 majors, touched a 2-month high. Speculators are factoring in the upcoming increase in the US government spending after the adoption of Biden's stimulus bill, so the growing public debt weighs on the US currency. The euro finished the week with a gain, but only thanks to the weakness of its rival, the US dollar. Investors continue to monitor the impact of quarantine restrictions on economic activity and household consumption in Europe, as well as the pace of vaccination against COVID-19. The downside scenario for the euro-dollar pair became more real after the European Commission lowered its GDP forecast for 2021. It expects the Eurozone to expand by 3.8% this year and the same in 2022 after an unprecedented recession in 2020. The pound sterling closed last week on a more positive note. Investors welcomed fresh statistics showing that the UK economy avoided a recession in the last quarter of 2020. UK GDP grew by 1% from October to December, beating market forecasts. Early last week, the pound sterling hit its highest level since April 2018, amid the prospect of a faster economic recovery boosted by the COVID-19 vaccination program and massive fiscal stimulus. In addition, the rally of the British currency is fueled by expectations of the negative key rate and a post-Brexit trade deal with the EU. Bitcoin has broken new records again. Market participants turned bullish on the digital assets again after Tesla made an investment of $1.5 billion in Bitcoin. Over the week, it has gained 26%, reaching a historic high of $49,459. Oil prices also managed to sustain bullish bias. North Sea oil ended the week near the level of 62.61 per barrel. The weekly gain was more than 5.5% amid a decline in supply, improved prospects for economic recovery, and an acceleration in the pace of vaccination worldwide. Bulls were not spooked even by the fact that OPEC and the IEA downgraded their outlooks for oil demand. They think that the oil market is oversupplied. Oil prices are also edging higher amid the expectation of the adoption of Biden's relief bill. Meanwhile, bears took the upper hand over gold. Nevertheless, amid the US dollar's weakening across the board, gold ended the week with a slight increase for the first time in the last 3 months. You've watched the combined review of currency and commodity markets with me, Anna Kasatkina. Subscribe to our YouTube channel to keep track of all the latest financial events together with us on InstaTV. Bye.